Hi, this is Mac with PriceActionTradingSystem.com, and this is Monday, April the 30th, and this will be our chart lesson for today. Today's the last day of the month. We start the month of May tomorrow, so another month in the books. But hopefully you had a good day today. We had a pretty nice little trend going down here. We kind of went into this range, so this made it a little difficult. Um, really from about 10 o'clock. Uh, through early afternoon, it made it a little more difficult. There were some trades in here that I didn't mark that you could have taken, but I mainly marked the better trades, and there's actually one right here that I should have probably marked right here too, but it wasn't real clear yet that we were in this trading range until we got over here, and and the reason I didn't mark these two is because this range was really tight, so you could have gone short below this bar, but you're going short below a bullish bar that did break above, so it's dangerous that prices could pull back, and they did. And then by the time you got a chance to go short again, there was a doji, and then by the time you got this bar finished, you're going short at the very low. So there's just too many overlapping bars in here, so that's why I didn't mark any of those, but we'll talk about that a little more when we get there. But let's start with the first trade up here. You wouldn't have had this trend line in place yet. In fact, you probably should have had a trend line that looks something like that right there. So you wouldn't have had this in place, but this would have been your first break of this trend line. And the main thing is that you had all these matching highs over here, and prices broke above and failed. So going short right here below that little doji is a good entry. And you'll hear me talk about dojis and how they're not generally a good entry bar. The places where they are a good entry are when they're very close to a strong support area like down here, or a strong resistance area like up here. Um, that's when they're a good place to go long, because they generally are indicating a reversal on a swing if it's a if it's at a major high or low. So it's a little tricky with dojis, but this is the one time that I really like entering around a doji, and especially when it's a real small doji. So there was an entry here. If you didn't want to enter below the doji, you still could have entered here, expecting that prices are going to come back down here and at least test this low and probably make a new low, just like they did right here. And so that was your first entry of the day. And by that time, you should have at least drawn a trend line off those two swings, just in case. And you can see that came into play the rest of the day, and those were great setups. These were key entry points. So this was a strong resistance area all the way down through here, and you'll hear me talk about that a lot. A resistance area does not have to be flat like this, or a support area doesn't have to be flat. Trend lines are the same thing. They're just angled resistance lines and trend lines that come into play later in the day. So don't forget that. But so anyway, after you had these two swings, you should have drawn a trend line just to see what happened. And when you had a second entry short right here, here's your first leg up, your pullback, and then a second leg up. So that's a nice second entry short with a little bearish. It almost looks like a doji, but it's got a little bit of a bearish body. So going short right there was a great setup coming off that trend line, and that was a nice, easy setup there. And any runners would have been safe there, and you could have ridden this down to this last low and exited right there and got just about that entire move. So but anyway, but there was also a second entry short right here. The trend was still down, and a lot of times you'll get two legs down to a new low, and so I like this trade. This is a two-legged pullback to the EMA, so this is a second entry short right here. And it's very rare that a two-legged pullback to the EMA is going to fail. And so this was a good setup, and there was also a double top right there, as you can see. Even if you'd have drawn it right there, you still got a double top, but that was probably where you got most of your touches and your closes, right across there. That's the pullback to test the breakout area. And when that held and that little tick went higher and prices turned lower, that's a great place to go short, mostly just because it's a two-legged pullback to the EMA in a downtrending market. And even though we'd had a trend line break, yeah, that was still a pretty good setup, especially since a lot of people got fooled to the long side. And but all you were able to get out of that was a scalp, and then prices reversed back up to this trend line. And of course, we already talked about that trade. Again, there's a setup right here, but it was risky because there's not a lot of room between here and these lows, and you actually already had a double bottom right here. So this is a lot of overlap, but if you're going to enter here, this is where you would do it on a failed break higher, and that would make this a second entry short right here. So if you took that trade, you see it worked out, but it's just not a good setup, so I didn't mark it. The better setup was to wait on this double bottom right here with this little bullish bar. And you can see there's two legs down there to that new low, and so going long right there was an easy scalp back up. And then of course then we started to get the resistance across this top area. So there were a couple of setups right here, but for the reason I talked about a minute ago, they're not great setups. There's just too many overlapping bars. There's not enough room back down here to these lows. And you see what happened the first time we broke below these lows. Prices failed right there at the previous support area, reversed. So going long right there was a good trade because there's enough room to scalp out before getting back up here to these highs. And then you finally got another failed break higher. That one tick right there, you see how all those highs are across there? I usually like to use the lows, so that's a little failed break higher. You had the trend line at your back. You got this resistance area. So going short right here or right here were both good entries. This one was a little tricky because prices did back up a second, but as long as you kept your stop below your signal bar, which you could do real easily with less than a 2-point stop, this was a good setup, and prices ended up working lower. And you might even got a little more out of this because your runners, it bounced here and came back and got the runners, but depending on how you played your runners, you could have gotten a little more. I actually would have exited right here because that's the smart move, because you know prices are probably going to bounce there even if they're going to go lower. And there was actually a short right here as well. This is a breakout pullback short, but because this had been holding all day long for the most part, it was a little risky. It would have worked, but I didn't like it. The better move was to wait on the failed breakout and fade that and then catch this back to the high side. And you can see that was a very quick and easy trade to the long side. And that pretty much covered it for the day. Like I said, there were some other entries in there, but these were the top setups. And you didn't really want to go long right here because of all these overlapping bars. You've got this trend line coming down through here. But really prices were paying more attention to the little trading range that we had here than they were this trend line. If you take that out of the way, you can see that. And there was a setup right here, but this was well after 2:30, so obviously that's why I didn't mark that. And this would have worked for a scalp, nothing more. But it was dangerous taking that because we had this failed break lower first, and generally when you get a failed break lower out of one side, you're likely to get a bigger rally out the other side. And so there was a good chance we were going to go much higher over here. And you can see where we went. We just went and tested the next resistance area. And that's kind of what prices will do. Then they'll try to test this one and this one and this one all the way back up. So you always want to pay attention to your support and resistance areas, because that's where you're going to, something's going to happen. And generally you're going to get a bounce or a reversal there of some type. So hopefully that all makes sense. But somebody else asked me today about trading ranges, and I don't know when to trade. You know, how do you know to go long down here, and how do you know to go short? When do you know to do it and when do you not? And there's really no right or wrong answer there. And you know, I talk about this, and any of you that have been watching the videos for a while know I'll buy these blindly down here and give myself a hard 2-point stop, and buy it just like that and just scalp out 4 ticks. And you can see what happened every time. If you bought this, it was an easy 4-tick scalp. Now this last time it broke higher, but you see it still reversed first, giving you a chance to get out. Even if you'd had another stop right here, you'd have still got out with a tick or two. You wouldn't have got a full scalp. But when this ended as a doji, that's your key to either move your stop up or get out. And either that or you got to give it a bigger stop down here, and that's never a smart thing to do, because if it does go lower and you're wrong, prices are going to, you know, you're going to take a big hit. So there's no way to know what prices are going to do. But however, we know that we never trade on the breakout. We're always looking to fade the breakout. So when prices come up here and stall, if you get a chance to get short way up here, knowing that prices are probably going to come back down, then that's the way to do it. And just like right here, you see this trade right here. If you'd have went short right there, that's a second entry short on a smaller time frame. But look, there wasn't very much room, and prices just moved a tick or two, and then it trapped people, and they ran it back up here, and went just a tick higher, just enough to probably stop everybody out that put their stops right above that, and then it went back down again. And that's what you'll see. So don't put your stop. If you do enter right in here, don't put your stop one tick here. You need to give it a couple of ticks, because you see what each time prices got one tick higher, all they're doing is running the stops and then going the other way. And that's what they did down here. Once they hit here, it ran it down a little bit, but all they did was hit the stops and then reverse it out of there. And look, we're 4 or 5 points later down here in the overnight session. It's restarted. So on these trading ranges, you never know where the prices are going to go lower or go higher. It's a risk. But the more times prices touch here without getting a breakout, the more the odds are that prices are going to bounce or at least break out and fail and come back. And you can see anytime you would have bought across here or sold across here, you would have made money if you just scalped out 4 ticks. There's not one time that you wouldn't have, except over here, and there's no reason to enter over here because we never went back to the other side. So prices are hanging around up here, and that's a clue why you don't enter right there. And it's kind of the same thing here. When prices started hanging around down here, don't be going long right here yet. Wait and see if they don't go lower, and definitely don't trade on the breakout. You got to wait for a breakout pullback short, like right here. Prices broke lower finally, pulled back, and so going short would be right here. But again, I didn't like it just simply because it was too strong a support area, and we'd already had a trend line break and a new low, and so you needed a little better setup than that. So there's really no wrong or right answer. It's an art, and you get used to watching prices, you will know what happens. And anytime there's a breakout, prices almost always pull back and test that area, and it holds before prices go lower. And here's a good example right here. Prices broke higher above this little area right across here, and they pulled back and they held before they went higher. So that's kind of what it looked like. You got prices to hold right here, and then they went higher. And so that's what you would be looking at down here. You want prices to get below here and come back and test this and it hold and then go lower. That's when you want to try to go short. You want to see what was acting as support act as resistance if you want to go short, and you want to see what was acting as resistance act as support before you go long. So see what happened going long right here. Prices are reversing, and they're going to come back more than likely and test this previous resistance area. Now if it holds and acts as support now and then goes higher, then maybe you go higher with it. So there's no wrong or right answer there, and it's hard for me to say, well, how do you know you're going to trade it? How do you know what prices are going to do? Well, you don't. It's just a calculated risk. We know that 90% of the time prices are going to bounce off these areas, and so we know the odds are with us. Now if you start trying to pick and choose when you're going to do the trade, you'll probably get it wrong every time, and you'll probably lose money. However, don't pick and choose. When you got the support, just buy it. And when you got the resistance, you buy it every time, and you know over time the odds are going to be with you. And that's how you do it. And I know that sounds easier said than done, but you've got to trust the rules, you got to trust the trading strategy, and you got to pull the trigger. If you're shy about pulling the trigger, or you're only pulling the trigger trying to pick and choose, you're probably going to struggle, and you're probably going to have, because it never fails. You will get it. If you pick and choose, you will get it wrong, just like me. If I pick and choose, I get it wrong every single time. And don't ask me why, but that's just the laws of trading. If you know something does something 75 or 80% of the time, take that trade every time, put your stop in place, and let what's going to happen. And you know that 80% of the time you're going to be right. But if you start picking and choosing, you're just going to get it wrong more than you get it right. And I don't have a good answer for why. It's just the laws of trading. And I've traded long enough to know that whenever I pick and choose, I can't get it right. If you can get it right, more power to you, but my guess is you won't get it right picking and choosing. So learn the biases, figure them out, and go with them. Don't pick and choose or guess around. So hopefully that makes sense. I hope I'm not rambling today. But I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you tomorrow.